Hello students, and welcome back to the advanced course. If you've decided to jump right into this part of our education series, I highly advise you to go over the beginner's course as well. For we will talk in a specific language and we will take a lot of examples that we've already discussed during the first beginner's course section. So in this session, I'm going to explain what are the subjects that we're going to go through during this advanced course. And I won't say that specifically for each and every subject, but the idea of the advanced course is first of all to go over the tools that we're using as traders. And after defining them, we will see examples for each and every section. We will see examples from the market, and we will talk about the different instruments that we're using in order for us to increase the understanding of what's going on in the market. So first of all, we will talk about the connection between the two, the fundamental and the technical analysis. We will generally talk about trading around the world. Now, we've talked about liquidity in the beginner's course, and in this case, we will actually deal with the instruments that we're using in order for us to highlight the potential for a specific time frame during the day. Again, I will show examples of what we've discussed during the beginner's course, but we will talk about the instruments that we can use in order for us to grasp this understanding. After that, we will talk about the basics of analysis. What does it mean to be an analyst? On the financial side, time-wise, and obviously on the emotional side as well. We've described the emotional perspective so much, and we deal with so much emotions during our trading, analyzing others and analyzing ourselves, and becoming a trader or being an analyst has a huge part of that aspect. Now, I've repeatedly described dividing our own psychological aspects from the trading world, but the fact is that we can't divide that entirely. So in this case, we need to know how to handle emotions being a part of our analysis characteristics. After that, again, we will talk about the technical versus the fundamental. The important stuff that we need to know regarding the difference between the two instruments. Now, we've already talked a lot about technical and fundamental analysis. We've talked about the basics of each and every one of them. But over here, we can actually start to refer to the different instruments that we're going to use. After we will complete this introduction to the advanced, that we will move forward and start to really dive deeper into technical analysis and fundamental analysis. On the technical aspect, we will talk about the trading view system. We will already start to learn how to use a specific system from A to Z. Now, this session is very, very important. I don't think that it will be a short session because I've got a lot of instruments that we will use later on when we'll decide to use different technical instruments. So I will give you a wide explanation about the trading view system, regarding all the instruments that you can use and how to apply them on the chart. And I don't want to confuse you over here on the trading view system session, but I might talk about other subjects that we will cover later on during this course. But I want you to use the instruments in the proper manner. And I will talk about each and every one of the instruments that we're going to use later on this technical analysis and fundamental analysis course. After that, we will talk about the Dow theory, which is a very, very basic term of how we're approaching the idea of technical analysis. The Dow theory sets basic rules and allows us to overcome obstacles at the beginning and start from flat, from the basics. That will always be our guideline. Even if we won't talk about that again later on, still that is the base for every technical analysis process. The next subject that we will describe will be introduction to Japanese candlesticks. Japanese candlestick charts are very, very well known and common way to analyze charts. I will give you other chart type examples, but Japanese candlestick are the most common usable chart formations, and because of that, they express psychology in the highest accuracy. So we will use Japanese candlestick as well in our analysis, But I want you to remember there are other types of charts, and we will describe them during this explanation. After that, we'll talk about gaps. Gaps are spaces between market price. It happens because of announcements, because of different hours during the day. For example, if you're trading stocks, then you can see that when the market is closed, we're closing in a specific price. And after that, when the market reopens, we might see a gap, a difference between the opening price and the closing price of that specific day. It will be easier for us to describe gaps, obviously, after we will talk about the Japanese candlestick, and we'll understand the expression of opening and closing prices for different candles. So gaps, we've got different definitions for different gap types, and we will cover them, and we will express a potential later on based on the idea of gaps. Introduction to technical tools. Over here, we will actually start to talk about the different technical tools that we can use, and a part of that obviously are the support and resistance, the trend lines, and other methods that we're using based on this idea. Every idea of technical instrument has a connection to the psychological aspect as well. Support and resistance are psychological perspectives, and trend lines are psychological perspectives as well. We need to understand what are the conclusions and the ideas that traders on the other end understand regarding a specific line, a specific psychological barrier, and we will learn how to use them on different time frames and the different expressions that we can expect to receive from each and every one of them. After that, we will talk about the introduction to Fibonacci scale. Fibonacci scale are very well known formations. Now, Fibonacci is a very, very beautiful thing about the market. Just a bit about Fibonacci over here as well. Fibonacci is the structure of nature, meaning that it resembles the way that nature is creating formations. And in this case, it's so beautiful to understand Fibonacci because the connection between nature and human behavior and charts, movement of price on the chart, is so tight until it becomes so beautiful. So Fibonacci is basically the most beautiful way to connect trading markets to human nature, to psychology, to behavior. And through the understanding of Fibonacci, we will be able to see how human nature is reflected through the charts. After that, we will talk about channels. Channels, they are a boundary of a specific movement. We will explain that widely when we will talk about channels. But before that, I'd like to mention that channels are psychological expressions as well, and we will make the connection and the idea. And it has a lot to do with the Dow theory. Again, Dow theory completes the idea of different time frames, different scales, just giving the basics for that. Channels is getting into this field, analyzing different structures on different time frames. And lastly, we will talk about introduction to indicators. Different indicators that are widely used. I'll give different examples for each and every indicator. And again, the widely used ones. On the strategy side, when we will deal with strategies, we will talk about these instruments and other indicators as well. So when we will talk about a specific strategy, I will define each and every indicator in the right order, in the right way for us to receive the information from. But over here, we will talk about the major indicators and how to use them on the different scales on the chart. And I'll show you several examples of how specific indicators can be used in different methods using a totally different expression. Completing the idea of technical analysis, we will move forward and start to talk about the fundamental analysis. Now, the first thing that we will describe on fundamental analysis will be expressions and expectations, meaning what we expect to receive from a specific movement or a specific change. How do we read announcements at all? After that, we will talk about the instruments that we're using when we will need to define a specific announcement and a specific potential. I will explain how to use the economic calendar, and no question about that. At the beginning, I do expect that you'll dive deeper and learn a bit about the important announcements so that you'll be able to prepare to defining the time frames when you're expecting to receive major announcements and having a connection to the financial market, not only on the chart side, the technical side, but also on announcements, on websites, specific websites that will deliver announcements, an important change that we're expecting to receive during a specific trading day. The next subject will be the market movers. They are the important announcements that we have to pay attention to, announcements that, looking at a chart, we will see a specific movement, we will see a correction, small deviation, small movement on a specific time frame, and we can't explain the reason for a specific movement if we're not attached to the market movers potential, because again, we will see the market changing according to announcements or potential of announcements. And then we will talk about liquidity based on fundamental analysis, how liquidity is working based on announcements and expectation. And I've talked about that slightly when we've talked about the market movers. We will see how the market is reacting, lack of liquidity, extended liquidity, and expectation. We will define each and every psychological aspect during this analysis. And at the last part, I'd like to go over several announcements that happened in the past and what was the expression on the chart, the actual expression. We'll talk about the effect of fundamental analysis on charts. Again, taking major impact, major announcements that happened in the past and going over the fundamental analysis side, how traders were expected to react or prepare to a specific announcement, and we will see that from the chart, and later on how traders actually reacted to specific announcements, and they will be the highlight of announcements of a specific time frame. And the last thing that we will describe during this advanced course is the connecting the dots. Over here, we will talk about methods and probability. I've talked about probability a lot during the beginner's course, and over here, we will actually make the connection between the different methods and probabilities. Now, we've divided the idea of becoming a trader using different time frames. We've talked about the scalpers, we've talked about the intraday, we've talked about the long term, the investors. And over here, again, we will make the connection between different methods and the probability of succeeding on each and every one of them under the different markets condition. We will talk about the power of combination, the connection between fundamental and technical analysis. Basically, we will cover this idea along the technical analysis side and the fundamental analysis side explanations. But again, the power of combination, the connection between them is essential. We will just conclude the ideas that we've described in the earlier stages. And lastly, we will talk about using multiple time frames with your trading method. It is essential. I've already mentioned that different traders will use different time frames, but it's essential for us to have an awareness of a higher time frame and a lower time frame for more precision. So we'll talk about that as well, and that will complete the advanced course. After that, you will have enough tools so that you'll be able to open charts, open a fundamental calendar, make a connection, look at charts, analyze them, and obviously you can already start trading. But again, we advise that at this part, you'll use a demo account and not a real account, so that you'll be able to test the different instruments that we're talking about, but not really starting to test yourself on the emotional side. We advise you to do that after you will learn a specific method, using a specific system for a specific time frame under all the tools that we've described during this advanced course.